Well, in addition to the tax cuts, the Finance Minister Nirmala Sitharaman also unveiled a fresh credit push last week. If you remember, she said banks will organize loan shamianas, that was the word she used, across 200 districts before the first week of October. A further 200 districts in the third and the fourth week of October could be attended by ministers, union ministers, MPs to add media attention. And the idea would be to encourage people and say that banks are open for business. Also, of course, the old RBI law that MSMEs will not be declared NPAs till the end of the current financial year, provided you restructure their loans. That also was re-emphasized. P S Jayakumar, Managing Director and CEO at Bank of Baroda, with us now. Good morning, Mr. Jayakumar. Well, before I come to the loan shamiana and the loan retail loan push, I wanted to ask you, what is your benefit from the tax cut? Hypothetically, how much more can you keep as profit vis-a-vis before the cut?
So our guidance was a pre-tax earnings of 6,000 crores flowing into a profit after tax of about 4,000 crores. So assuming nothing changes, the net effect would be in the 400-500 crore level in terms of net earnings.
Okay. Well, now to get to this loan shamiana concept that the Finance Minister has spoken about, there is a widespread worry that with the presence of ministers and their goading, the quality may fall. Would you worry?
See, just speaking about Bank of Baroda, one of our challenges has been to get more people out in the marketplace and in the sales mode, in the marketing mode, to get customers, the whole process of being outward bound for acquisition. So the way I read this whole program is that it will give fillip to that process we are already trying, in some way compelling it, be that it may be. It is necessary for the public sector banks in general and even for Bank of Baroda in particular to have a much more outward outlook, and I do hope many of the branches do go out in the marketplace and do originate new quality customer. To the extent we have moved to scorecards as a method for approving customers, whether it's a credit bureau score or any other forms of internal scorecard, I do think that the whole exercise should not necessarily result in any incremental losses. And finally, going by various newspaper reports, various kinds of comments that banks have gone into a shell implicitly means good quality credit is being denied. Maybe this would help in addressing that issue.
Mr. Jayakumar, good morning. Thank you for your thoughts. I also wanted your views on whether the RBI's external benchmark move could put further pressure on banks' earnings, not just yours, but the industry as a whole.
What we have seen based on data, when you take a 5-year, 4-year, 3-year kind of view and look at the monetary transmission and the effect on net interest margin, effectively, whatever has been the reduction in the repo rate has been passed back to the customer, and during this period, net interest margin has not necessarily been impacted. It's been impacted for reasons other than, has been impacted primarily on account of non-earning asset. So my surmise is that as long as we keep the focus and ensure that we have good recoveries and the non-earning asset component of a balance sheet comes off, it would to a large extent nullify any potential margin reduction. But when you take a 3-year, 5-year kind of empirical data, it is suggestive of the fact that there is no real material effect on net interest margin.
Okay. No, I mean, the worry really is that this rule comes in on October 1st. There is a guaranteed rate cut on October 4th. So, I mean, and your liabilities, your savings rate can't be moved up and down. Therefore, the second half looks like pressure on rates. And look at the yields. They are not moving. So, you do have a problem of liabilities.
Yes, we do have, but having said that, it's a complex logic. Let me give you another view on it. We're today carrying, say, let us 40,000 crores of excess liquidity, which are invested at 6.7 or 6.75% Government of India yield curve. Actually, it will be less than that because you're not investing all of it in the long-term bond. A pickup in credit, should it not offset net interest margin by moving the asset class from a bond investment to a customer related investment? So it's a kind of it's not actually, you cannot exactly say it's going to be, in general, in the short term, while there could be pressure in terms of net interest margin, the way we are looking at it is possibly a pickup in a better credit growth, and also the fact that the non-earning assets do come off a bit. and that should to a large extent insulate us. Assuming neither of these two things happen, there is still a certain amount of benefit we have got on the SLR portfolio, the profits we are harvesting from there, which effectively should immunize any downside with respect to the net interest margin.
But are you sure of a credit offtake, Mr. Jayakumar? Just having a loan Shamiana doesn't mean people have a job or that people have a security of job and will therefore take an EMI.
Well, there are two parts to it. One part is a set of economic measures that have been announced, starting with the FDI and the NBFC liquidity, and now the tax cut. And the overall sense that this is going to improve the sentiments. And even just now, your earlier commentators had said that they expect the auto industry volumes to pick up on the back of a significant price discount, coupled with improved sentiment and a ground feeling that there is an improvement in the demand. So let's hope that it plays out that way. Will it be back to the same level of growth of 10-12%? Whether at least at a minimum it would stem the decline that's been happening. So yes, I do expect credit pickup to happen. And just speaking only on one item, which is the credit enhanced instrument that the government is offering for 1 lakh crores to the NBFC. Even as we look at our portfolio, we should be probably doing 6,000 to 7,000 crores between now and say the first week of October. So yes, I do expect the credit pickup to happen.
Okay, that's good to hear. And finally, sir, a two-part question. What is your Mudra loan NPA level? And if you're going to restructure MSMEs by March 2020, should we see, combined with Mudra and this restructuring, a second wave of MSME problems, say in FY 21 or 22?
I will take the second question first, the MSME part. I mean, we're looking at some of the MSME NPA or potential NPA, and I'm kind of hitting myself and saying, how could we let this happen? For instance, the payment cycle itself has expanded from 90 days to 150 days. And then as a bank, if you don't readjust the receivable cycle for the customer, surely there's going to be a problem over here. To a certain extent, the restructuring is impacted by the current day scenario, which is there is a buildup in the inventory, or there is a build-up in the receivables, and we have to account for it by providing for a larger working capital cycle. So by itself is not bad. But where the problem could arise is if the industry or the unit is shut, and then we do a restructuring, we're effectively postponing the issues for another day. So I think I would like to answer that in that part. As far as the Mudra program is concerned, I want to look at it in two different ways. One is that there is a section of the Mudra loan that doesn't pay, which probably is consumption related, and we are therefore trying to go for higher ticket Mudra loan, which effectively is providing a higher level of performance. Be that it may be, the fact is that when you finance 100 customers, and let us say 95 of them end up doing well, to that extent there is a significant positive effect on the economy, in as much as it's creating more employment opportunity in the unorganized sector.
Okay.
So I think we have to give Mudra a little bit of time, but my experience in consumer business is that over a period of time, bad loans pay off, and then you identify the right type of customers and you can scale them up.
Okay, yes, and now you have, of course, machine learning and analytics to help you. Thank you very much, Mr. Jayakumar, for joining us with your quick thoughts on a whole host of policy announcements.
Thank you very much.
Okay, and meanwhile, of course, the markets kind of cooled a bit.